Hey everybody, welcome back to Chipstock Investor. Going to be talking about one of my favorite companies in 2024 that I was feeling pretty darn good about at the end of the year, PureStorage. And you probably have noticed the market has been in an absolute bloodbath, and PureStorage has been no exception, had a pretty significant fall off in the recent week. Although there's been this sell off in PureStorage stock, you may be wondering what Chipstock Investor is doing with their position. We'll talk about that today and the outlook for this coming year. But before we continue, quick word from the sponsor of today's video, public.com. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, even crypto if that's your thing. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/CSI and get up to $10,000 when you transfer in your old portfolio. That's public.com/CSI. This ad slot paid for by Public Investing. Full disclosures in the video description. As a refresher, PureStorage fits into that big bubble on the right side of our flowchart: tech equipment and devices. PureStorage is an assembler of storage systems. Unlike memory IDMs who actually make the ingredients that go into the final dish, PureStorage is kind of like the chef who takes all those ingredients and serves them up into the final usable package, a storage server. And to top it off, PureStorage has a software suite that goes along with that final device, and that is an important key factor in the overall success of PureStorage. Here's some of the competitors for PureStorage. They include Dell Enterprise, HP Enterprise, Hitachi Vantara, IBM, Supermicro, NetApp. All of these are assemblers of various components to make up that storage server. You may be saying, wait a minute, Chipstock Investor, you say that you don't like assemblers of parts or components. You're right, we typically don't. However, PureStorage is the leader in this competitive market, as stated by Gartner. And you may notice that it's a narrow lead, but PureStorage has been moving up the ranks. And again, the software suite and the subscription service model makes PureStorage a company much more appealing to us personally than some of its competitors. Here's the last 5 years in review in regards to their subscription revenue and subscription percent of total revenue. The subscription percent of total revenue has increased steadily over the years, making it 52% of their total revenue in fiscal year 2025, which we just finished up. PureStorage management has said that they logged higher outright sales of storage server hardware in the last year, which accounted for that slower pace of their subscription growth. Now, computing and cloud services you can really think of as a utility company. All of that data and compute power that we need to do our daily work or watch dog and cat videos requires a lot of storage. That data has traditionally been stored on hard disk drives. There's a lot of flash in public cloud offered to cloud infrastructure customers, but a lot of the cloud infrastructure internal workloads still use a lot of hard disk drives or HDDs. But last quarter, PureStorage announced that they have made a deal with one of the 4 top hyperscalers. That announcement was made in partnership with Kioxia, and the goal is to start storing that data in flash storage versus hard disk drives. Now, commenting on this relationship, this is what CEO Charlie Giancarlo had to say in this most recent earnings call. He said the relationship is proceeding well, and it's in the next stages of testing and deployment plans. They continue to see progress on certifying their use across multiple price performance layers. They are looking to deploy this technology and enable the hyperscaler to have consistent architecture across multiple performance tiers of their storage hierarchy. This also will allow the hyperscaler to redeploy significant amounts of power and space to new workloads and to increase their data storage performance, reliability, and lifetime. We talked about this in depth in our last PureStorage video, which I'll link here, describing why this is important for large hyperscalers. Now, it's good to remember that last quarter, management made it very clear that the actual cold, hard cash from this agreement or this partnership is not going to be seen until at least 2026, but the market seemed to want more immediate results. Let's quickly review the fiscal year 2025 financial summary. The subscription annual recurring revenue came in at $1.66 billion. Revenue in total just close to $3.2 billion, which is up 12% year over year. Operating cash flow, $753 million, and free cash flow, just over $526 million. That was the past. Now let's focus on the future. This is their quarterly guidance for Q1 fiscal 2026. $770 million in the next quarter for revenue, which would imply a 11% year-over-year growth rate and a sequential decrease of 12.5%. Now, as far as fiscal year 2026, which corresponds to the year we're in right now, 2025 guidance, revenue is expected to come in around $3.5 billion, which would be a revenue increase year over year of 11%. Remember, PureStorage did say that revenue from the hyperscaler would not make any meaningful contribution until calendar year 2026. And until then, they will increase their operating investments in fiscal year 2026 in order to scale operations and broaden the opportunity to offer these solutions to that hyperscaler and hopefully other similar customers as well. Also, it's important to factor into this that the partnership with the hyperscaler is for the technology, licensing, and support services. It's not for hardware. If you haven't seen our video on IP and licensing yet, I'll link it here. Great video to cover why IP and licensing is such an important part of the semiconductor industry as a whole. And it could mean a higher profit margin sale for PureStorage. With that increased investment in their operating activities, we have seen an overall decrease in their free cash flow margin, but their GAAP operating profit margin remains narrowly positive, just over 3%. We expect that these two metrics will gradually converge over time, the hope being that both of them would be north of a 20% margin on both a GAAP and free cash flow basis. PureStorage did repurchase a hefty amount of shares, $580 million in the last fiscal year, resulting in free cash flow per share of $1.54. To date, these buybacks are offset by employee stock-based compensation. Let's get to the summation of what this means for us personally here at Chipstock Investor for our PureStorage position, as well as what you may want to consider for your portfolio as well. Flashback to the December valuation notes. This is when the stock price was around $65 per share and a market cap of $21 billion. At that time, PureStorage was trading for around 30x current year expected free cash flow. When we did a reverse DCF, that fair value of $65 showed a free cash flow per share growth rate of 15% for the next 5 years. If you haven't watched the video, go back and check it out from December, going over some of these metrics specifically, but let's talk about what the valuation is now. Now, sadly, the stock is all the way down to $49 per share or thereabouts. Market cap dropped down to just about $16 billion. And now PureStorage is trading for around 29x current year expected free cash flow. They have a healthy balance sheet, $1.52 billion in cash and short-term investments, $100 million in debt. So that is clean. So let's talk about a reverse DCF that gets us to that fair value of $49 per share. That $49 per share implies a free cash flow per share growth of 10.5% in the next 5 years. At least that's one scenario that we can make that is baked into this current stock price. So we had 15% for the next 5 years in the December valuation. Now, here in February, it actually drops all the way down to 10.5%. in free cash flow per share growth for the next 5 years, 6% terminal growth rate, and then a discount rate of 10%. So, is this reasonable? We think so. We haven't added to our position during the dip, but we plan to nibble later in March. PureStorage is still a smaller position for us, but we're happy to let it gradually increase as a percentage of our portfolio if they make steady progress. But this could be a good time to start a position or add based on this valuation if you have been eyeing PureStorage stock for your portfolio. Keep the position small though and be patient. Thanks everybody for watching this episode of Chip Stock Investor. Make sure you sub the channel, like the video, share with your friends, and check out Semiconductor Insider membership. Link in the description below. Just $10 a month gets you access to our Discord server where we have all of our show notes, live Q&As, and great discussion with a community of like-minded investors. Check that out in the link below, and we will see you all again very soon at Chip Stock Investor.